that we are doing is receipts and payments account. Receipts and payment account, first we'll do the theory part. Receipts and payment account is a summary of cash including bank receipts and payments during an accounting period. Receipts and payments are being shown under the appropriate heads of accounts. So what we have to understand in this receipt and payment account is, it's just like a cash book, or basically all the transactions that has related to cash or bank. Whatever cash you have received or whatever cash has been spent should be coming in the receipt and payment account. We are not concerned with whether this is an expense related to the previous year or to the coming year. All the cash whichever has been spent during this accounting period, all whatever cash which has come as an income during this accounting period will form a part of this account. Now moving on to the next slide, we'll study a little bit about features or characteristics of receipts and payment account. The first characteristic is your nature. What is the nature of this account? It's basically an asset account because we show all the cash receipts and we show whatever is the cash payments. Cash includes bank in this case, right? Now the second point that we'll discuss about the characteristic of this account is basis of preparing. How are we going to prepare this? Stop now. So the second feature is your basis of preparing. On what basis are we preparing this account? This account is prepared only on cash basis. Whatever cash comes, we put it. Whatever cash goes, we put it over there. And the third part is your capital and revenue. Now this account does not bother about whether it's a capital expense or whether it's a revenue expenditure. Everything comes in this account, whether it's a capital income, capital expense, revenue expense, whatever it is, all the things is put into this account. Then the fourth point is your period. Now this is prepared for a particular accounting period. However, we do not bother about whether those expenses relate to the previous year or whether those expenses relate to the next year. Everything is coming in this receipt and payment account. If in this accounting period any cash transaction has happened, it will be coming into this account. So whether it relates to the services provided in the previous year or it's to be provided in the next year, we are not bothered with that. Next is your opening and closing balances. The opening and closing balances is shown in the receipt and payment account. Whatever is the opening cash in hand or the bank balance or any opening bank OD, everything will be put in the receipt and payment account. Then your next is adjustments. All the adjustments, whether outstanding, prepaid, whatever it is, it does not come in the receipt and payment account. All these adjustments is done in the income and expenditure account. Last is your purpose. What is the purpose of making this account? The purpose of making this account is to understand how much cash transactions happened, how much cash came in, how much cash went out. So these are the features of the receipts and payment account. Now moving to the limitations of receipt and payment account. It does not show expenses and income for the accounting period. Expenses and incomes of earlier period and the following period is also shown. And besides payments of liabilities, capital receipts is also shown in this account. So in this what happens, we cannot understand only through receipt and payment account whether this expense was related to this year or whether this expense is related to the coming year. Whether this income, that is through maybe through subscriptions, whatever we received, was it concerned with only this year or is it a part of previous outstanding or advance? So this is one of the major limitations of receipt and payment account. We also do not understand whether it's a capital expenditure or a revenue expenditure. It does not show whether the NPO is able to meet its day-to-day expenses out of its income or not. So this is also one of the bigger limitations of NPO because we are not able to understand whether our expenses is being met from the income or not. Thank you. Good morning students. We have already finished NPO's basics. We learnt about what is an NPO, for what purpose does it function, what are the organizations that comes under NPO, and what are the various funds, what are the various sources of income that an NPO has. So today's topic, we are going to focus on receipts and payment account. We are going to study about receipts and payment account. Now, first of all, let me tell you all, there is nothing to be scared on this topic, not-for-profit organization. A lot of students tell me that they find this topic very difficult. Ma'am, this is something very new, we cannot handle it, it's too confusing. Please lay it to rest. This is one of the easiest chapter. There are just a few tricks which you need to understand. Treat this chapter just like a... Now, what are the other items which would come in this receipt account? What is the main source of income that this not-for-profit organization has? They are the subscriptions. Now, what is a subscription? Subscription is basically, see, if you want to become a member of an organization, you need to pay some amount of a monthly subscription. It could be a yearly subscription also, or a half yearly subscription also. So the amount which the members pay to the organization to continue being members are known as subscriptions. We will deal with the subscription account in a separate class by itself. So all the subscription amounts that you are receiving is coming on this side again. Now again, the same thing which I told you, whether the subscription relates to this year or the previous year or the next year, all the subscriptions would be coming in the receipt and payment account. So whether, like for example, say you did not pay your subscriptions for 2018-19 year, which you are paying in this year. So even though that subscription amount was related to the previous year, but since you are paying cash in this year, that would be coming in this receipt and payment account. So the subscription has previous year, current year and the next year. All the figures it would be included. Now what else can this NPO have as receipts? One is your donations. A lot of people, we make donations. So we can make donations generally to temples or the churches or to some hospitals. So whatever is this donation willingly which we give, that is another source of income for this NPO. So that donations. Then there is grants. What are these grants? This grants is mostly given as a loan, or not as a loan actually. It can be given as by the government or by institutions to help these organizations. Those are grants. That is also a part of your receipt. Whether the receipt is capital in nature or revenue in nature, both the things would be coming in receipt and payment account. So whether the grant, see, grant is more like a capital nature grant. You will not get grant every month or every year. You might have got it once in 3 years or 4 years, but still that amount would be coming in your receipt and payment account. Then next is say your entrance or admission fees. Any amount which when you become a member of the club, you would paying some amount as entrance or admission fees, that amount also comes here. Apart from that, any other kind of things. For example, say legacy, membership fees, any kind of interest received, rent received, dividend received, right? So all these things are a part of your receipt and payment account. Apart from this, what are the various things which can come? Now for example, you had some, you are a sporting club, so you had some sports materials which you were using. Now they are like a little worn, torn out. You will be selling it off. We sell it off to that local person who comes and collects the waste and everything. So we are going to sell it off, this used material, the old newspapers, the old magazines. So all this thing that we sell off, we get some money on it. So that also comes to the receipt account. So to sale of old newspaper, to sale of used sports material. You might be having some shares of certain companies and you would be receiving dividend on it. So to dividend, to endowment fund, all these things in which you are receiving money, any kind of money which you are cash, which you are receiving in your business will come under receipts account. Payment side. Supposing in this receipt side we considered that if the balance, the opening balance, whether it's in cash or bank, would be coming here. But say the opening balance is an overdraft balance, it's a bank overdraft balance, it's a negative balance basically. So where would that balance come? All of you already know that that balance would be coming on the other side. So here it would be by balance brought down if it's an OD balance. Cash, of course, we cannot have a negative balance, so it would be a bank OD balance on this side which would come. Now all types of payments which you are making would be coming on this side. So what are the various payments which we might be making? Just like final accounts, just imagine in that profit and loss account in the final accounts what all items you used to write. It's exactly those same thing which is going to come over here. That is your salaries, honorarium, rent. That is, see, if you're receiving rent, it would come over here. It's your property, you're receiving rent from some tenant, it would be coming over here. But if you're paying the rent, right, it's your own, where your office is, you're paying rent, that would of course be coming over here. So rent, salaries, then apart from that there would be, say, postage, telegram, stationery. Now what is honorarium? Have you heard of this word before, honorarium? What happens is, in this not-for-profit organization, there are a lot of people who work for them, not for a salary thing, not for a income purpose. They do it like a social service, like a charity. They want to utilize their time. So these people, we don't pay them a big enough salary, but we pay them a small amount to appreciate them for their services. That amount is known as a honorarium. We don't call it as a salary, we call it as an honorarium. What are the other things that can come over here? We can have, say, building, land and building. We are going to buy a building for our office purpose, so that would again come over here. Apart from that, maintenance expense, office maintenance that you are doing. You are buying sports material. You are buying sports material, you are paying for the office maintenance. All this comes under payment account. Apart from all the expenses, there can be various other expenses also. Like for example, you are buying sports material, you are using, you are distributing prizes, you are buying, say, or you are investing money, say, you are repaying off a loan. All that comes under the payment. Now, we add up all these receipts, we subtract all the payments. The amount that is left is your closing balance. That amount comes over here by balance brought down. Cash and bank separately you can mention. So this is all about your receipt and payment account. Receipt and payment account, I'll just do a quick recap. Expenses, income, all those outstanding and prepaid adjustments are not made in the receipt and payment account. Depreciation, all these things we do not make any kind of adjustments in the receipt and payment account. As I told you, here we just mentioned the cash which is coming, the cash which is going. All those adjustments we learn in the next topic, which we will make in income and expenditure account. Alright, now I hope the theory plus how the presentation of receipts and payment account is done is clear for all of you. Next we would be learning income and expenditure account. I would like to repeat again, NPO is going to come for 10 marks in your examination, and it is very easy to score this 10 on 10 because we are aiming for a 95 plus in accounts.